are talking to only 10% of the public because it doesn't apply to the other 90%. Y'all get this, right? This is how asinine these things are that float around on the internet. And that you're stupid. Even your stupid CPA sometimes tells you this. Oh, you need to keep a home mortgage. But we're going to do a standard. Why did I keep a home mortgage again? Because I love the bank and my FICO score. That's why I kept it. No. So let's figure out what a tax deduction. Let's pretend that you're one of the 10% that does actually write the interest off. Let's see how this works, okay? Now, let's pretend you had a $200,000 mortgage. Now, that'd be cheap. And let's pretend you had a 5% interest rate, so the math is easy. That'd also be cheap, right? But this is easy math, okay? So 5% of 200,000 is 10,000. Does that sound right? Say yes. So if you have a 5% mortgage, you owe 200,000. That year, you paid $10,000 worth of interest. Do you understand? Say yes. That means if you're one of the 10% that do a write-off, instead of taking the standard deduction, then you would have a $10,000 tax deduction on your income. You would reduce your income by $10,000 before calculating your taxes. That's how a tax deduction works. Y'all understand that? Say yes. So let's look at how that works. Okay, $10,000 off of my income means I don't pay $10,000. I don't pay taxes on that $10,000 worth of income. If I'm in a 22% tax bracket, which means I make $85,000 a year, I save $2,200 in taxes. So here's what the TikTok genius or the CPA genius told you to do. Send $10,000 to the bank to keep from sending the government $2,200. And try it again. Send $10,000 to the bank to keep from sending, this is a tax deduction, the government $2,200. You're trading dollars for quarters, y'all understand that? If you want to make that trade, I'm going to open a booth at the break. And yet people do it in America all day long, and they say, keep a mortgage because you should reinvest it, although no millionaires do. Keep a mortgage because of the tax deduction. Only 10% of people itemize, and those that do are trading dollars for quarters. And we wonder why people are broke in America with all these lies and mathematical mythology flowing around all over the place. Brought to you by Bank of America. Guess who wants you in debt on your mortgage? Banks. Did we miss that somewhere? There's a theme here, boys and girls. Now, we're out of debt after baby step 6. We're doing 4, 5, and 6 simultaneously, then we're not. Now we're debt free, house and everything. You know how fast you can get really rich with your old house payment? That one number into a mutual fund turned you into a millionaire real fast. No house payment. Average person doing this stuff is paying off their home in 7.2 years. The average millionaire paid off theirs in 11.2 years, unless we found them in the Ramsey tribe, and then they were doing it in around 9 years. Definitely not, I'm keeping a mortgage my whole life. I'm getting out of debt because that house is going to go up in value with no debt. It's going to be part of my $1 million plus net worth, and it frees up all of my income, my most powerful wealth building tool to build wealth, and I can go like crazy now. All I got left to do is build wealth and give outrageously. Dave, giving money away, though, takes away from money from pursuing your goals. Well, again, that's a limited mathematical understanding of how things actually work in the real world. Generosity actually has an odd way of creating wealth, and here's why. Generous people have a tendency to prosper versus ungenerous people. Now, here's why. It's not mystical. Some preachers make it very preachery and all that, and you can do that if you want to. I don't mind putting it in Bible language if you want me to. I can do that, but that's not the important thing. Here's what happens. Okay, generosity is not an act. It is a character quality. The character quality causes the act. Does that make sense? Integrity is not an act. It is a character quality. Integrity causes certain actions like honesty and, a complete whole life, the way you look at things in wholeness, it's whole, all this stuff. Integrity comes from the word integer, which is a whole number, all that. So these are character things that reflect, that show up in our behavior. Generosity is who you are. It's not what you do. Does that make sense? Say yes. Okay. So generous people, in other words, are the ones that hold the door for you. They're not self-centered, they're other-centered. Generous people, when you're walking through the parking lot and those stupid bags bust open and stuff's rolling around all over the parking lot, they're the ones that run and help you pick up the stuff. The next time that happens, the person helping you is very likely a millionaire. Because there's a correlation in all this stuff that we found over all these years. The data, again, is there to show this. So, and the reason is they're unselfish. They hold the door. They have more of a tendency to smile. They are thinking about others, not themselves all the time. That is the essence of being generous. Does that make sense? Say yes. Part of that is you give away money. Part of that is you give away time and talent. Part of that is you're just helpful. You're more likely to stay married. And that's neat because marriage is grand, but divorce is 50 grand. Right? It's a relational issue. I was preaching a little Baptist church up in Paducah, Kentucky about 30 years ago, and I did this whole sermon on tithing, and the preacher came out and he said, well, Dave, you know, I never had a couple in my church in 38 years that tithed that got divorced. And I said, well, is that like a Bible thing, or is that God protecting them, or what do you think? And he said, no. Generous people, just easier to live with. There it is. Who gets promoted at work? Selfish, backstabbing, throat cutter? Only if you're working in corporate America, right? But in most jobs, if you're the employer, who do you promote? People who are likable, they smile more, they're generous, they think about the good of the overall project and the company, not just themselves. See what I'm talking about? Yes. Generous people have a tendency to make more money and build more wealth through their life. So generosity is not, so don't be so short-sighted as to say it's, if I have $100 and I give away $10, I only have 90. Yes, but you changed who you are. Or you reflected the changes in who you are. And that is going to cause you to make a lot more than that 10 over time. And besides, my friend Rabbi Lappin says, he's an Orthodox Jewish rabbi, and he's a wonderful teacher. We become close friends. And he says, money is not like a cake, where when you give away a slice, you have less. Money is like candles. When you use it to light others, there's more light. You're not diminished when you light someone else's candle. And that's how money works in the real world. Beautiful Jewish view of things. I love it. Fabulous. So people who are generous excel at wealth building. We'll talk about that more a little bit later too. So what are we saying? We're saying live like no one else so that later you can live and give like no one else. And you could do that if you didn't have any payments and a couple $1 million in your mutual fund and your house is paid for and you saw someone sitting next to you at church whose light bill just got cut off. You could go and pay for it. They wouldn't even know who did it, and you'd be one of those people. Hello? It's a different thing, right? We are blessed to be a blessing.
Dave Ramsey passionately debunks the common advice that keeping a home mortgage for the sake of a tax deduction is financially wise. He explains that this advice is only relevant to about 10% of the population who itemize their tax deductions, and even then, the benefits are often overstated. For instance, if you have a $200,000 mortgage with a 5% interest rate, you might pay $10,000 in interest, which could reduce your taxable income by $10,000. However, this only saves you $2,200 in taxes if you're in a 22% tax bracket. Ramsey argues that it's foolish to send $10,000 to the bank just to save $2,200 in taxes, likening it to trading dollars for quarters. Ramsey emphasizes that paying off your mortgage as quickly as possible is a much better financial strategy. He notes that the average person who follows his plan pays off their home in about 7 years, which frees up significant income to invest and build wealth. Without a mortgage, you can invest your former house payment into mutual funds, rapidly accelerating your journey to becoming a millionaire. He argues that keeping a mortgage for life is a misguided approach that hinders wealth building. Generosity is another key point Ramsey discusses. He believes that generous people tend to prosper because generosity is a character trait that influences one's actions and interactions with others. Generous individuals are more likely to be helpful, considerate, and other-centered, which makes them more likable and likely to succeed in various aspects of life, including their careers. Ramsey shares an anecdote about a pastor who observed that couples who tithe regularly are less likely to get divorced, not because of divine intervention, but because generous people are generally easier to live with. Ramsey extends this idea by explaining that generous people tend to be more successful in the workplace. Employers are more likely to promote individuals who are cooperative, positive, and focused on the greater good of the company, rather than those who are selfish and cutthroat. He argues that generosity leads to greater wealth over time because it shapes who you are, and that giving away a portion of your income can actually lead to greater financial success in the long run. Ramsey dispels the notion that giving money away diminishes your wealth. He quotes Rabbi Lapin, who compares money to candles. When you use a candle to light another, it doesn't diminish the first candle's light, but rather increases the overall light. In the same way, Ramsey argues, generosity spreads wealth and creates more opportunities for prosperity. He believes that living generously allows people to build wealth while also making a positive impact on others. He reiterates his famous mantra, "Live like no one else, so that later you can live and give like no one else." This means making sacrifices and wise financial decisions now, such as getting out of debt and building savings, so that in the future you have the freedom to be generous and financially secure. Ramsey encourages people to imagine being in a position where they can quietly pay off someone's utility bill or help a family in need without even being noticed. Ramsey concludes by outlining his baby steps financial plan, which includes steps like building an emergency fund, paying off all debts except the mortgage, and investing in retirement. He promotes Financial Peace University, FPU, a course designed to help people follow these steps and achieve financial freedom. Ramsey notes that the average person who completes the FPU course saves $2,700 and pays off $5,300 in debt within 90 days and $8,000 financial turnaround. He encourages viewers to take action by enrolling in FPU, stressing that winning with money is an intentional act that requires commitment and discipline. Ramsey believes that by following his plan, anyone can change their financial future and achieve lasting financial peace. He ends with a motivational message, expressing confidence in the viewer's ability to succeed and reminding them that they have the power to change their family's financial destiny.